You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. At Masters in Trading Live, I get on here every day the market's open, 11 o'clock Eastern Time, go over the market, share some thoughts, and once in a while we'll share our trade of the day. It is a weird market. Vol is elevated 30 days out going into the election, but short-term volatility measures are squashed, are really low. So the market's been super strong. Today it's pulling back a little bit, but that short-term volatility is really low. Market is just waiting on bated breath for the election, it seems like. So we'll go over the market. I want to go over oil volatility. Oil volatility is spiking. Interesting. I want to talk about two really cool trades. One, the crack spread. Two, the spark spread. And you can also go to masterthantrading.com. We've just put an article up about the crack spread and about the spark spread that'll help explain today's presentation. So let's go over to the screen share and let's start talking about it. The first thing we're going to talk about is the Qs. Okay, I have the Qs up here. And what have we been talking about? Going back to a month, the month high is going to be 98.83. Last month's high, 493.70. If we go down to a weekly, our line in the sand is 494.50. 494.50. We've now traded under 494.50. But this VIX 90 is so offered. I would not expect the market to continue going lower as long as this VIX 90 stays offered under 15 like it is. So that's something to watch out. Let's go to the slide deck, and we're going to start here. Put on my pen. So what do we have? Here we have CVOL. CVOL, you can go to the CME.com, and search CVOL, and it'll get you to this page eventually. We're looking at oil volatility. Oil volatility is spiking right now, and we haven't seen oil volatility up like this going back to 2022. So when we see volatility in a sector rise like this, that's when there's opportunity. We want to go where the volatility is going. That's where the action is. So because vol is going into the energy sector, we should be looking at energy trades. Two really cool energy trades. One, the crack spread. The crack spread, it's the difference between the cost of crude oil and the selling price of refined petroleum products like gasoline and diesel. It measures refinery profit margins. So the crack spread, if you follow the crack spread, it'll literally tell you the performance of refineries. The spark spread, it's the difference between the price of electricity and the cost of natural gas used to generate that electricity. It measures the profitability of electricity generators that use natural gas as fuel. So in front of you, here's what the crack spread looks like. And the crack spread, it's heating oil, RBOB gasoline, and then oil. It's 1 part heating oil, 2 parts RBOB gasoline, and 3 parts WTI oil. This red line is the crack spread. The crack spread is offered, and recently It's just started to rally. It started to turn the corner. I'm looking at a bunch of different refiners. PSX, I'll write them down for you guys. CVX, MPC, and Velo. These names are going to follow the crack spread. So crack spread gets really low. It goes to rally. We want to look for whatever is inexpensive relative to the other refiners. So if I go to the next chart, this looks at things on a shorter term, just looking for 1 year. Right here, MPC seems pretty inexpensive, especially relative to CVX. So a trader looking to get long a refiner may consider getting long MPC. A trader who wants to get short a refiner or hedge MPC may consider CVX. A really cool, simple way to look at energy stocks. This is the spark spread. Now again, if you guys go onto mastersinTrading.com, we just put a blog up to help you learn about the crack spread and about the spark spread. Right here, unearthing hidden gems in the energy markets, your guide to the crack spread and the spark spread. So go over to Masters in Trading, check that out. I think you guys will really like it. In front of you, I have the spark spread. Now the spark spread is going to be electricity into natural gas. Now, I had to kind of make a proxy for the spark spread. The formula that I used is this. And this is electricity 8 times against natural gas, going back to 2010. But recently, the spark spread has been really strong. So what names would do well against the spark spread? Glad you asked. We'll go through a couple of key sectors. We have the utilities, electricity producers, independent power producers, and then energy companies. Electricity producers, you can look at NE, Next, Era Energy, Duke Energy, or Exelon. All correlated, and once in a while those correlations break down and you want to look to buy whatever's inexpensive. Independent power producers, you can look at NRG or VST. VST has been incredibly strong in 2024. And then finally, energy companies consider Dominion Energy, symbol D, SRE. Long-term members of Masters in Trading are going to be familiar with SRE. And then finally, SO is going to be another correlated energy company. Here's one more for you. This is not energies. This is just unusual optioned activity because this popped up on our unusual optioned activity scanner yesterday. WSC. Why this popped up was because of these massive orders. 11,000 vertical call spread. So if you have 11,000 option contracts times 100, that equals 1.1 million shares of stock once those get in the money. 1.1 million shares of stock when only 1.5 million shares traded for the day. These options go out 185 days, but that's a very, very bullish order in ticker WSC. Right now, I'm going to hop on and I want to go through some earnings trades. We are in earnings season. Earnings season just started. When we do earnings trades, it's just rinse and repeat every single earnings season for everybody in All Access. You guys don't go anywhere. We're going to go over an earnings trade.